Well, happy Wednesday, everybody. Stratton Mortgage here again, doing the podcast, again, trying to help keep people informed with all going on here. As usual, lead off with their introductions. I'm Tom Christie.
Bill Seach.
Adam Baumline.
Go Buckeyes. We beat Michigan last night. Did anybody see that?
Yeah, that was
And the Blue
actually a
Jackets
really
won
good
over
game,
to
too.
OT, baby.
Against Bob, too. That was even bigger.
Yeah.
How about that?
Hey, so something that we wanted to talk about here, this is something we've talked about a couple of times, but just how big of a deal doing refinances are today. I know we talked last week. We've had some people calling off of our podcast just inquiring about information, and it worked out for everybody.
Right.
Like I said,
For sure.
how many times we talk about, hey, the math either makes sense or it doesn't. I will say one thing I know a lot of people get concerned about is like, well, that's going to cost me money. And that's where I try to show people the math. It's not what you think. I've closed numerous where the loan actually pays people to do a refinance. And when you do a refinance, you get to skip a payment. There's occasions where you can skip two sometimes.
So-
escrow refunds.
Yeah.
Like this, you can do almost a cash out loan without doing a cash out loan with the refinance.
There's that, or sometimes what a lot of people don't realize is because we're a broker and we can shop around to different banks and lenders, maybe lenders price a lot on how busy they are. And with refinancing volumes up, even in our world, when you're looking at those rate sheets and pricing things out, you can tell if they're busy. It's pretty easy. Their rates are higher.
You worked at a bank that we won't even say the name out there, but we have friends that work there that they will purposely boost rates up higher just to slow their influx of
If
applications.
you go there, you're just subject to whatever it is at the time. Where in our world, we can look around. So, maybe one bank's rates lower. Maybe we get an underwriting fee waived. That saves you, $800 to $900 in cost.
2 appraisal waivers this week.
Appraisal waivers, that
no.
saves you another $400 or $500. So
Up to 90% on one.
Yeah.
We heard from Justin, right?
Oh yeah, that's right. Yeah, so those are coming
That's
back
3
again.
this week,
So
yeah.
it's becoming a bigger
Yeah.
deal, and that's just another step of. And when I'm doing these people, I tell them all the time, like if I don't deliver, don't close the loan, because especially if you get an appraisal waiver, you have not a
there's not a
investment in this.
commitment. Yeah.
So when we go through the process, and if that math doesn't make sense and we don't deliver, we have only wasted our time. And we are all way too busy
Which is
to
not
do
gonna
that.
happen.
We can't do
Yeah.
that. I mean, so it's
not gonna happen.
It's transparency. You know exactly what you're going to get, and then we reiterate that all over again once the loan gets done. It's something else that's a big difference between us and those retails out there. Like, there's one lender that can do it, but in reality, we don't have like a par rate, right? So I mean, there's either rate X could actually give you money back, or if you go down, there could be a small cost. So. Again, I did one today for a gal. She's like, you know what? She took a little bit higher of a rate because that's what she wanted. And it was a difference of a payment. It was like $10 difference, but she's getting $2,000 of a credit. So, I mean, that's, again,
And we don't have to
different ideas.
so it doesn't need to be 3.75.
Yeah.
We can do 3.70, 3.682. We whatever it is, we can get you the lower rate and do that. And or maybe you're looking for a certain credit back, right? Because in our world, we can't. The compensation, the lender compensation level, say it doesn't matter. So maybe you get a little bit more of a credit back, or a different rate pays different. Whereas in the mortgage banking world, maybe they just make that a par rate, and they're keeping
They're keeping
what
that
if it's
overage
like
money.
$150, whatever, right? $172.14. Okay, well, we have to give that to
Yeah,
you.
that's still $172. I mean, no one would
Correct.
walk over that on the street. And
Correct.
you're exactly right. That's where those banks will have that. Well, here's your even par pricing. No, in our world, there's an overage on that in a very likely case. And that overage goes back to you as a form of a credit.
Or we can go with specifically one lender. We can do the par rate, and then it might be, like I said,
That's what's weird, yeah.
3.598.
I did.
Okay, well, it's less than
3.562, right?
Yeah, but it's less than 3.625. It's a lower rate.
Yeah.
So that's a
It's a big deal, man. I mean,
huge advantage that we have. Huge.
and again, that's
Huge.
just about transparency. A lot of things, like if you talk to those call centers, they're just kind of going through the process, and just enough to get through the process. The things that you really should be knowing aren't being told to you. I mean, it just and it happens time and time again when I get people on the phone. It's just like, wow, I didn't realize we could do this. I didn't know this could happen.
It's the advisor role. So, and going on that, so literally just this morning, so I've got a customer who, depending on what the property they're looking at, this is pretty rare, but I either have to do the conventional loan with down payment assistance or FHA. And they're like, we don't understand why you can't give us just a generic letter. And I said, well, listen, if I give you a conventional letter, but you got to go FHA, it's in the contract. You're going conventional. That they might not switch it. Now, if you start FHA and go conventional, more than likely they would.
Yeah.
But you don't know. It's your contract states you're doing that here, so you have to do it. So, we started looking at it, and they sent me a property. So I ran it through. The advisor. I'm like, well, listen, this property you can do the conventional option on it, which this is what I was telling you about. So they're doing a 97% loan, conventional loan. They're getting a 4%. They're covering 4%. They're covering 3% down, and they're getting 1% back on it.
On a purchase.
On a purchase. So if they get seller concessions, then they're not putting any money down.
Right.
And it priced better than it was depending on the property taxes, but it priced better than FHA. So I said, well, actually, this is better because the payment's lower, and conventional, technically in our market, is more likely to be accepted than FHA. So that was a big deal, and that was me being advisor. It took me a long time to run both those through because you got to put it on the community seconds and this and that. I mean, it's a lot of work.
Right.
So I could have just said, hey, you're doing the FHA grant program, and but I didn't, because it was better for them.
Take the time and the extra effort to ensure that they're going down the right path and ensure they have a better opportunity to win that contract when they're in most likely a multiple offer, especially in Columbus right now. Yeah. It sounds confusing on the surface. And as you get us on the phone, we talk, it's not. And that's where the math comes in. You start to really understand, like, oh, I can see why you're suggesting this, or I see why you gave this idea, and I can see why this is where I'd want to go. Like it all does start to come together when you start to talk about it. And not to mention when you walk out that door and you put you in a better deal and on the way to real estate wealth, you have a better knowledge of your asset now at that point too. You're not getting that anywhere else. You aren't. It's a fact.
It's true. Yeah. Well, that's where we having the advisor role and doing what we do. That's why, especially right now, like you said, with the refinances, and it just so happened to work out last week that they all worked out. But we've all had a scenario where, like, it might be no. Actually, I did have one last week that called in because we had gotten some information from what we send out, and I was looking at doing the refinance, and I'm like, I started talking to her. They're going to move in like a year, and in their particular case, because our rates are so low, for me to get her to bring it down enough, it just didn't make any sense. I'm like, listen,
we're going to do this over $30. Like that's not worth it.
Like it's just not worth it. Let's just hold off. You guys are looking to move in a year. We'll set you up on a follow-up just like we do with everybody. Mm-hmm. We'll touch base with you on the purchase. Because it really honestly, and I could have done it. And it was a big loan too. Like it would have been.
There's a natural benefit
nice
somewhere.
But it just
you wouldn't do it yourself.
No,
so
no.
Yeah, exactly.
No, I wouldn't. Yeah.
Doesn't make sense. Don't do it.
Yeah. So reach out to us. There's the links below on the YouTube, the podcast. Check us out on Facebook, StrattonMortgage.com. Anywhere, get to us, ask us questions. We'll get you the answers. It doesn't cost you anything. It's free.
It's math, and you'll see it. It's 1 + 1 = 2. Again, we do so good at details with you. You're going to understand exactly how it works. I mean, if you could go from 29 years left, you buy your house last year, we can put you in a 20-year fixed, and your payment stays exactly the same. Why would you not do that? I mean, that's you're paying your asset down faster, building real estate wealth faster. It's putting you in a better position. Some of them were moving
to the same term and saving money. So
it's everybody's situation is different. It's just but you could look at it from both ends and what's best for your family at that particular position. If you're fine with that payment, let's knock 9 years out.
Basically, it takes you 10 minutes to figure out if you could save $200 a month sometimes too. You know what I mean? So
even $600. I mean, I'm doing one right now. $620 a month savings right now.
That's crazy.
So I mean, you don't know what you don't know. You've got to ask.
Yeah. We'll get you those figures and numbers and put them in the calculator. And
everybody asks for Bill when you call. I'm just kidding. It's got to bring some fun into this thing. Right? But no, and be sure you're going to get pre-qualified too. I know we say this every week. The bidding is starting already. It's February. I just lost a bid on a 215 house at 223.5. I had a VA approval. Maybe that steered them away. I don't know why it would. But I lost it already on that one. You know what I mean?
Well, it wasn't the VA. It was that somebody came in over asking. And that's where, if they're coming in over asking, that's most likely.
Sometimes what you can do.
Yeah. There's just exactly. There's just sometimes you just can't win with those. But but to your point.
Somebody's going to pay cash. Yeah.
It's hot, man. It's a very hot market. She
wants to look at your house, man. She asks me all the time.
Oh, yeah. It's coming on the market here in a week. So.
Right. Is it right? Okay, cool.
Yeah.
All right.
Hey. All right, guys. Have a great week.
Yeah.
Look forward to hearing from people. Take care.
Go Jackets.